We still feel that the short-term outlook remains bleak because the property sector distress and zero COVID situation continue just to drag on growth. At the EIU, we're forecasting about 3.3 GDP growth for China this year. Essentially, the economy still remains fragile after bottoming out, even with these modest improvements that we're seeing and some of the positive data that we saw in August being better than expected. Essentially, zero COVID has stomped on consumer and investor confidence in China, and we don't see those improving quite yet. And I think the real policy action that would probably need to be taken to restore confidence, softening zero COVID, it does not seem to be on the horizon at the moment.
Right. So in saying that, do you think, Mattie, it's a little bit too optimistic for investors to be expecting an easing of zero COVID and this lockdown-heavy policy post-party Congress?
Mm-hmm. We did not see investor confidence kind of respond positively after this data dump on Friday. I think that investors still remain in a wait-and-see mode when it comes to China. In terms of a change after the 20th Party Congress in October, we're just weeks away from it, but we're not yet seeing the policy levers being pulled necessary to facilitate a change. There have been other economies, notably Singapore, Australia, New Zealand, South Korea, who've transitioned from a zero COVID approach to kind of living with the virus. And there's kind of a playbook, and China's simply not following it. That said, China tends to follow its own playbook, but I don't see the groundwork being laid at this moment for a significant change post-Party Congress. We do think that there will be continual adjustments to the policy, but not an immediate change this year.